This is Akashvani. In the program Money Talk, now we bring you a discussion on ease of doing business and record inflow of foreign portfolio investment. The participants are Puja, Mehra, Economic Analyst, and Anubha, Rohatgi, Anchor.
The Indian economy is continuing to flourish amidst geopolitical tensions and global economy going through a tough time. A record inflow of foreign portfolio investment FPI in the month of May is one indication of this. Among the many factors which are contributing to India's onward stride towards prosperity is its improved ease of doing business. To discuss these issues in detail, Ms. Mehra, welcome to the program.
Thank you for having me on your show.
Ms. Mehra, India has remained one of the most attractive destinations for foreign portfolio investors with 60,000 crore rupees total inflows so far in the current fiscal. In fact, according to the National Securities Depository Limited NSDL data, FPI reached nearly 44,000 crore in May 2023, which is the highest in the last 9 months. What, according to you, are the reasons for this bullish trend of the FPIs?
Since this new financial year began in April this year, FPIs have been bringing in a lot of money after the last 2 financial years when they were not bringing in as much money. So they brought in money in April, there were net purchases also in May, and in June, in fact, they've already in the first 5 days brought in more than 7,000 crore rupees, and just 9 weeks of this year, they've already brought in more than $5 billion. I think the reason this bullishness is the comparative economic record in even the latest GDP estimates that have come out for India relative to other Asian economies, where India has been estimated to be growing at 7.2% in the financial year 2023, where India outperforms other economies. And the sector-wise data shows that FPIs, this money that they have brought in, they have put this money in IT, in fast-moving consumer goods such as FMCGs, automobile, auto components, metals, telecommunications, etc., all of which tells us that, as you know, services exports from India have done very well in recent months. FMCG is expected to do well if there is a revival in consumption demand, as is being expected and as companies are saying. And automobiles have managed to overcome the problems they were facing earlier because of the chip shortage, and therefore they're also expected to post profits. And I think that is what is making these companies and therefore the Indian economy very attractive to FPIs.
You mentioned some of the sectors that have seen the maximum FPI inflows in the recent time. Can you expand on that, and what are the reasons for these particular sectors that have attracted the maximum FPI?
What is happening is that, if inflation rates fall, we have seen in the last 2-3 months, inflation has fallen more than what was being projected by the Reserve Bank of India after a year last year of high inflation. Companies are going to be able to pass on the benefits of lower input costs to consumers, and that is expected to help consumers buy more. Therefore, that will increase demand. This is also helped by the fact that global commodity prices are down, so therefore input costs are going to come down, and it is expected that companies will pass on those benefits in retail prices, and therefore they're expecting demand perhaps to increase, and that should result in higher volumes. If the rural demand improves, if what I'm saying plays through, and if rural demand improves, then FMCG sector companies tend to do well there. Automobiles, like I said, automobiles were not having a good time because there was this global chip shortage, and that problem seems to have been resolved. The pent-up demand from the COVID years is likely to translate into higher sales for these companies, and that makes these sectors attractive. I'd like to mention here another thing that, Global Investment Bank, Goldman Sachs, has just brought out an analysis of the top 500 companies that are listed on India's National Stock Exchange. And according to this analysis by Goldman Sachs, more than half of these 500 companies have in the last 10 years delivered capital gains of more than 1,000%, which means investors who had bought shares of these companies have received excellent returns, and that makes the Indian stock market returns stand out. Clearly, FPIs are going to like, what they're reading in this report. So that's another factor I think that we should expect them to be bullish going by this.
So what is the impact on the economy? Because we keep seeing that this FPI figures, like a few months ago, they were on the downside. Now we are seeing record inflows. So what is the impact on the economy when there is an increase or even when there is a decrease in FPI?
When there is an increase in FPI, say if any companies are trying to raise capital on the equity market, it becomes easier for them to do that. If they want to raise capital and make investments in existing factories or set up new factories, that becomes easier for them. If the government wants to do a disinvestment program and sell shares in some of the companies that the government owns, it helps the general sentiment on the stock market improves, and it helps the disinvestment program, which helps government raise revenue from selling shares, and it eases the budget.
So one factor that has contributed to attracting FIIs in India is the fact that the ease of doing business has improved significantly over the last few years. Would you agree with this assessment?
I think one of the main things that has helped business is the whole big drive India has made on digitalization and electronic payments, where people are able to make small transactions or large transactions in a matter of seconds through fairly safe electronic modes of payment, be it people who are selling products, be it money transfers, fund transfers. So all of that is good. Paying taxes online has become very easy. Filing returns online has become fairly easy. Tax refunds, which has implications for especially the small companies, their working capital requirements. Tax refunds now getting processed a lot quicker than they were earlier. I think many of the glitches in the GST when it was first introduced, those are slowly getting ironed out. So that is work in progress. That is improving. One of the more important things I think that was done was when the corporate tax rate was reduced. So that reduction in corporate tax rate always makes an economy more attractive, relatively speaking, to us, because all economies compete for investments with each other. So lower corporate tax rate helps. And that's the other thing. I think then the number of returns itself that have to be filed for something like GST, that has been looked at. There is scope for improving it even more. There is scope for rationalization of the tax structure itself over there. But it has been improving. Then there are many, under the corporate laws, company law, there are many compliances that have been decriminalized. Land records have been digitalized. Property tax records in many cities are being digitalized. What that does is it makes it easier for people who own even small parcels of land to take loans, and easier credit is something that helps business always. Many people will say lots more could have been done. I agree with that, but we can't lose sight of the fact that many things have been done, and I guess cumulatively it is beginning to add to this positive sentiment, which is bringing the foreign investors into the stock markets in a big way right now.
Of course, you've explained in great detail the effects of digitization and the tax reforms that have that have helped in attracting foreign investment. Can you think of other measures and reforms that the government has undertaken, such as focusing on the infrastructure, providing incentives to businesses, modifying FDI rules, that are also helping invite foreign investment?
FDI caps have been relaxed in few sectors. I don't think there are too many FDI caps now remaining in too many sectors. That as means of restriction, that used to be a restriction earlier, so that's progressively being done away with in most sectors, other than I think perhaps the most strategic sectors. Then infrastructure is being focused on. That's right. Infrastructure has been a big thrust area, especially through the budget. There is a lot of emphasis on allocations for capital expenditure, and that itself creates a positive feel-good factor for the sentiment for investors, because it's expected to pull in private investment. And the reform of the insolvency-related provisions that were provided, over a period of time, that is expected to get streamlined for. So that also is a positive. And one thing that you have not mentioned, but I would like to mention, is that, there was a huge banking crisis that is now that is being brought under control, and banks' books have been gradually cleaned up. Bank loans have received a lot of attention, and as you know, just recently the Reserve Bank of India governor also said that they are again noticing some hiding of bad loans and evergreening of loans that could result in defaults by banks, and they are paying attention on that part of the bank's books. Once the interest rates begin to come down, once inflation is brought under control, this improvement in the bank's books and the bad loans situation will also begin to show results. That also is a positive.
What about the global economic issues? How do they affect FPI? And specifically, if I talk about the US Fed, there has been an aggressive stance of the US Fed, increasing the interest rates for the last 1 year. How does that affect the FPI inflows into India? And will it do so in the future?
It could. If the US Federal Reserve increase interest rates, like it is now again being said that they will increase interest rates. And if they do that, then the interest rate differential between the US and India becomes more. It becomes more attractive for investors to put their money in the US because the interest rates will be higher there. And that can reduce the strength of the flows from foreign investors coming to India. So that is something that needs to be watched. The second thing is that if the global economic situation becomes such that the larger economies go into recession. Already Germany is being talked about, but some of the other countries are still not looking like they're going to go into a recession. But if they do, or if there is a considerable slowdown, then there will be a further decline in demand for Indian exports. The merchandise exports are not doing as well as service exports from India because there is a global contraction in global demand. So that sort of reduction in global demand will not be good news for the Indian economy or for investments in India. So those are the two things. The third thing is that the OPEC has announced that they are going to reduce production of oil. And if there are cuts in production of oil, and we've been seeing slight comfort on the oil import bill front, if OPEC does reduce the oil production and global oil prices go up or global commodity prices go up, then that, all this good news that we've been seeing in the last few weeks on the front of inflation and therefore profits of Indian companies because of low input costs, that, sort of will no longer be as good, and that can become negative. But I don't want to, at this point focus so much on all of this because been focusing on this for quite some time, and the worst fears that we've had has not so far translated into reality. So let's hold on for some more time to optimism and let's see how it plays. Let's keep our fingers crossed is what I'll
Yes, let's
say.
keep our fingers crossed. And like I said, let's focus on all the positives. So given India's growth story, which is being appreciated and talked about the world over, we are the fastest growing economy. We are the bright spot in global economy. Do you expect the FPI inflows continuing in India?
I expect FPI inflows to continue because companies that they come to, these select companies performing very well, they are market leaders, they have everything going for them. My only wish is that, if we could do the few things that we need to do to improve the manufacturing sector, which I'm afraid is not doing well as we would like it to, then that sector is capable of generating so many more jobs, which means so many more people who are going to go out and buy things. And, that becomes a very sustainable cycle of economic growth. That is something we still have to focus on. We still have to work towards. If we can crack that will be really good for our economy. So, I do expect FPIs to keep investing, but this could become a much bigger story if we can just get the manufacturing sector on track. That's the one sort of, thing that we need to focus on. Yeah, jobs is a big thing that, I would like India to focus on.
Yeah, and like talked about the jobs and, other factors, ease of doing business, when it improves, it also is necessary for making India. It is also necessary for India to, become Atmanirbhar Bharat. Wouldn't you say that?
Absolutely. Economic security, I feel, goes a very long way in any country becoming secure. So we saw last year, right, that we had food security at a time when there was because of the Ukraine war, there was a global increase in food prices. There were many countries because they could not import from Russia and Ukraine, and in general, there were shortages. It was not as easy for them to manage their food economy as it was for India. We also saw some increase in prices, especially of wheat, etc. But we were able to manage, and we had that food security. Similarly, if we have that economic, we were able to manage also for energy security because we were able to import oil from Russia paying less. There is so much more we can do in building our strategic reserves, for instance, of crude oil, etc. If we could have economic security where our own market is so large, there are so many people, all our consumers are able to afford to buy goods and services produced in our country, then that is a kind of an economic security which is a power to be reckoned with. So most certainly, I think economic security becomes a very big thing when we talk about Atmanirbhar Bharat.
Thank you, Ms. Mehra, for talking to us.
Thank you.
You were listening to a discussion on ease of doing business and record inflow of foreign portfolio investment. The participants were Puja, Mehra, Economic Analyst, and Anubha, Rohatgi, Anchor. This program was produced and presented by the News Services Division of Akashvani. You can listen to it on our mobile app News on AIR. This program is also available on our YouTube channel News on AIR Official. You may share your feedback about this program through email at airnsdtalks@gmail.com or WhatsApp on 9289094044.